In this continuing series, we continue to build our total return TFSA from 0 to 100K. This time around, we hit our first rebalance, so there may be a few changes. Hold on to your seatbelts, folks. This is going to be a good one. As we hit our 9th month in the challenge, we have a total of $4,630 invested into the portfolio. $500 is added each month as a base amount, and we also take any super chats, thanks, or stickers from the live streams and add that to the pool as well. So far, you guys have contributed a total of $130. Thank you for your support. The theme of this month is rebalancing. It is very easy to add to a portfolio, but from time to time, we like to evaluate the current stocks and diversification to see if there are any changes that could make the portfolio overall better.
Candace, how often do you do that?
That is a fantastic question. Personally, I like to do a deeper evaluation every quarter and rebalance if necessary. Mind you, if I am happy with the current stocks, sometimes a rebalance may be a simple do nothing. Those stocks may be fine just the way they are. Most times, there is perhaps one stock that is just underperforming, and your money may have a much better chance of growing if it were reallocated to somebody who's going to get with the program. You do have to be careful to not just sell losers for the sake of getting rid of the red. A good example, I currently have one stock in the red that is in the food services business, and normally this is a stock that does, rather well. So I am looking at this as not a stock to sell in the rebalance, but rather one to average down. I know when that sector recovers, this stock will be back to their usual amazing self. On the other side of that, I had an energy stock that was underperforming even as the sector had been doing much better. It made sense to take a loss on that one and reallocate that money to better stocks. Taking a loss is, it's never fun, but sometimes you do have to do it for, the sake of keeping your portfolio in a very healthy state. In the rebalance, I did sell out of 3 positions in total. The energy stock I mentioned just a moment ago and 2 others. The other 2 stocks were both good companies. OpenText is a solid Canadian tech company, but I did want to reallocate that tech sector dollar over to, gain more exposure to the NASDAQ. And that's the only reason OpenText was sold, and I did sell them at a profit. The other stock I sold was Stella-Jones, which I love, and I may very well buy them back in the future. However, I did want to get in on a stock I feel is prime for some good recovery growth later in the year, so I moved those funds from Stella-Jones to Bell Canada. Not a huge rebalance this time, but until the summer, I am happy with the current lineup. I still have work on my stake percentages as I am a little high on some companies. As a rule of thumb, I like to maintain a 5% exposure in any one company or a 10% exposure in an ETF, income fund, or asset management stock. In addition to that, I try to maintain a maximum of 20% exposure in any one sector. When it comes to rebalancing these numbers, I generally will use passive rebalancing to move the stakes closer to my goals. What I mean by this is that I will allocate new money and dividends to stocks that are under my stake limits or to a new stock I am adding, which helps to pull down the numbers on the ones that are a little bit above my stake limits. Currently, 10 of the 18 stocks in my portfolio are above my limits. Between now and the summer, you can expect to see these move in the right direction with my passive rebalancing efforts. Join today's conversation. Let me know in the comments your rebalancing strategy. Thank you for your participation. If you love this sort of content, be sure to subscribe for more. And another huge thank you for that click. So as I mentioned earlier, Alvo Petro Energy, OpenText Corporation, and Stella-Jones have left the challenge in our rebalance. We have also added 2 new stocks to the challenge, so without any further ado, let's do this. We will begin with Alimentation Couche-Tard. No changes here as we hold steady at 5 shares. Their adjusted cost base still at $77.19. Their current price, $77.31. We have received 53 cents in dividends thus far. We are expecting another dividend payout, and in fact, we probably will have received it by the time you are watching this. So their return on investment comes in at 0.16%, and they have a total return of 0.29%. This was not a great month for ATD as they dropped quite a bit. I still love this stock, and I'm hoping to see some better returns moving forward. Up next, we have Brookfield Asset Management. We once again added one more share for a total of 7 shares. Their adjusted cost base comes in at $48.03. They have a current price of $56.90. We received another $3.08 in dividends this month, bringing that total up to $6.09. Their return on investment, a very nice looking 16.42%. Factor in the dividends, we get a total return of 17.50%. BAM had another good month, and I am still very happy with them for sure. Up next, we have our first new addition to the portfolio in Bell Canada. We opened with 7 shares. Their adjusted cost base comes in at $48.59, and since we bought them, that price has fallen a bit more, down to $46.03. I do believe we are very close to the bottom, and even if it falls a wee bit more, I'm not really too worried. This one is going to look great once recovery begins for the sector. We've not received any dividends yet, and both the return on investment and total return sit at negative 5.27%. Come on, BCE. Don't you let me down. Next, we have Scotiabank, and we hold steady at 7 shares. Their adjusted cost base, $61.67. Current price, $70.07. Dividends, so far we've received $10.60, so that is a return on investment of 13.62%. Factor in the dividends, we get a very good looking total return of 16.08%. Scotiabank just keeps on trucking along and in the right direction. We added another 10 shares to the Purpose Bitcoin Yield ETF for a total of 40 shares. So that brings that adjusted cost base up to $5.21. Their current price is $7. We have also received another $1.43 in dividends, bringing that dividend total up to $3.76. Their return on investment, fantastic, 34.36%. That total return, 36.16%. These are some nice returns, and as long as Bitcoin keeps riding high, this ETF should not fail to deliver. In fact, could this return be big enough to win the GOAT Award? We'll find out a little bit later. Up next, we have Canadian Natural Resources, and they hold steady at 3 shares. Their adjusted cost base, $84.55. Their price, a nice looking $103.33. We have received $3.80 in total dividends. That gives them a return on investment of 22.21%, total return of 23.71%. CNQ had a great month, and that total return is climbing in the right direction. Moving to CNR, we held our position steady at 2 shares, so their adjusted cost base still $151.74. Their current price, $178.38. $1.69 of dividends did arrive, so that takes their dividend total up to $4.06. Their return on investment, 17.55%. Total return, 18.89%. That is absolutely awesome. CNR had another good month, and their total return is exactly where I like to see it. Up next, we have Decisive Dividend Corporation. We did add 3 more shares for a total of 23 shares. Their adjusted cost base comes in at $8.72. Current price, $10.48. We did receive another 90 cents in dividends, bringing that total up to $4.70. Their return on investment, 20.18%. Total return of 22.53%. DE is doing just fine, and I certainly have no complaints with them at all. Our second new addition this month is Diversified Dividend Corporation. They are a royalty company, and I opened this position with 20 shares. The adjusted cost base came in at $2.76, and they're already worth $2.91. Plus, I actually have received dividends already, 42 cents. I think this is the first time in Challenge history that I managed to buy a new stock and get dividends in the same month. That's not too shabby for sure. Their return on investment comes in at 5.43%, and they have a total return of 6.20%. I do love royalty stocks, and this is just a great little gem. Up next is Canoe EIT, and I added another 10 shares for a total of 40 shares. Average cost base rising up to $13. Their current price is $13.72. I also received an additional $3 in dividends. That takes our dividend total up to $12.60. Their return on investment, 5.54%. Total return, factoring in the dividends, comes in at 7.96%. Canoe did increase their returns a little more this month, so all is well in the world of Canoe. Fortis is up next, and we did not add any more, so we are still steady at 3 shares. That adjusted cost base still $54.84. Their current price, $53.52. We did receive another $1.77 in dividends, so that takes that dividend total up to $2.95. Their return on investment still in the negative at negative 2.41%. Factoring in the dividends, it doesn't get them out of the red yet. Close, negative 0.61%. It was a slightly better month for Fortis, but they still need to do better. Up next is Hammond Manufacturing, and we did add 3 more shares for a total of 23 shares. Their adjusted cost base is now up to $8.65. Current price $11.52. We've received 18 cents in dividends thus far. This makes their return on investment at 33.18%, down quite a bit from last time. That total return 33.27%. Hammond has slipped out of the GOAT spot. I did not see that coming. However, with a good correction, it did open an opportunity to buy more. We added 2 more shares of Pizza for a total of 7 shares. That actually dropped their adjusted cost base down to $14.53. Their current price, $13.82. We did receive 39 cents in dividends, so that dividend total is now at 78 cents. That return on investment, negative 4.89%. With the dividends, total return, negative 4.12%. Another one of those stocks in the food services industry, so I do expect they will be fine once recovery sets in. Up next is Riocan, and we added 5 more shares for a total of 10 shares in total. Their adjusted cost base comes in at $17.66. Their current price, $18.47. We did receive 46 cents in dividends, bringing that dividend total up to $1.36. Currently, the return on investment, 4.59%. Total return of 5.36%. I am still looking forward to some good recovery in real estate in the later half of the year. Next, we have Sir Royalty, and I added 5 more shares for a total of 20. The adjusted cost base came down a little bit to $16.14. We did receive 2 sets of dividends from SRV, a $1.43 and a $1.90. So that's actually a total of $3.33 that came into the dividend pot, taking it up to $9.12. That return on investment, negative 9.85%. Total return, negative 7.03%. If this one continues to struggle, I'm just going to add more for sure. Next, we have Timber Creek Financial. I added 4 more shares for a total of 11. Their adjusted cost base coming in at $7.35. Their current price is $7.73. We did receive our first set of dividends from these guys at 98 cents. Their return on investment comes in at 5.17%, and that total return comes in at 6.38%. I am definitely happy with this one, no complaints. I did leave 2 out, as we have that side challenge on covered call ETF versus the regular ETF. Let's see how they did. Up first, we have the Horizon NASDAQ 100 Index ETF, and I added 2 more shares, taking it up to 4 in total. So its adjusted cost base, $68.60. Current price, $70.61. So this one here, they don't have any dividends, so it's just a straight up total return of 2.93%. Tech definitely cooled off a wee bit last month, but we still have a return. That's all that counts. Finally, we have the Horizons NASDAQ 100 Covered Call ETF. I added another 13 shares for a total of 25 shares. Their adjusted cost base, $11.59. Price $11.72. They have received their first set of divs at $1.29. So their return on investment, 1.12%, total return of 1.57%. So HXQ is off to a small lead over QQCC. But we have more months ahead, and you never know what can happen. Though the running hypothesis is that HXQ has it in the bag. We'll have to see. Let's take a quick look at all of them together so we can see how that portfolio is taking shape. We have a portfolio real total return of 9.31%. So they are down about 1%. I blame Hammond. Just kidding. I still love you, Hammond. As usual, let's take a quick look at the portfolio's diversification. Using Blossom, we can get a nice diversification breakdown. I do try to limit each sector to a maximum of 20%, though I'm not usually too worried if I go over a wee bit. And we have that in 2 sectors. Financial currently sitting at 24.4%, industrials 22.7%, consumer cyclical 13.5%, energy at 9.3%, communications jumping up from the bottom to 8.7%. That's with, of course, the addition of Bell. Technology, 7.0%. Real estate, 4.3%. Utilities, 3.7%. Healthcare, 2.9%. Consumer staples at 1.9%, and in the last spot is materials at 1.6%. Materials fell quite a bit because we did sell out of Stella Jones. Next month's stocks, they're absolutely going to be taking these numbers into consideration. It is time to look at the toad and the goat of the portfolio for the next month. The infamous Toad Award for our worst performer of the month is actually going to Serb Royalty with a negative 7.03% total return. This is not a bad one at all, as this is a royalty stock and I do still have a lot of confidence in them, as I mentioned before. And now for the goat. And we have a new goat. The Purpose Bitcoin Yield Fund took advantage of a Hammond correction and it passed them into the coveted title with a 36.16% total return. Next month will be epic as these two superstars battle it out. I wonder who's going to take it. So that is our update for this month. We will be back here again next month to do it all over again. I'm sure I'm looking forward to buying the next batch. If you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on Canoe. Thank you for watching, and I will see you in the next video.